U.S. soybean farmers are starting their harvest, but they face steep losses that could fuel farm bankruptcies and foreclosures nationwide.
This is awful discouraging. You know, we do our very best to grow a good crop to feed the world, and then we can't hardly give it away.
The stock market closed last week going up in flames as the VIX skyrockets over 30%, giving us a clear warning of the market's volatility. Now, we're going to start today's video with a brief breakdown of what's going on in the markets, and then we're going to go under the hood and we're going to look at the stats and the data on farmers to determine what exactly is happening and how much of a hit have these soybean farmers really taken. Now, that's an especially important question to ask because, as we're going to discuss in our last segment, Trump plans on doing a $10 to $14 billion bailout. Now, by the end of this video, you should be able to answer the question, is this bailout just more propaganda that's going to end up hurting mom and pop, or is this something we desperately need to keep our country from starving? And having said that, guys, happy Sunday and welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. Starting with the Dow Jones dropping 878 points or 1.9%, which is erasing all of the last month of gains. As you guys can see here, over the last month, it is down 0.77%. S&P ending Friday down 2.71% or 182 points. And when we scroll down here, you can see the last month of profit being down over 1 month, 0.48%. NASDAQ closing Friday down a whopping 3.56% or 820 points. Now they're up 0.29% over the last month. The VIX closed Friday up a whopping 31.83%, again, further demonstrating the volatility in the market. 5 charts that are going to show us just how overvalued the stock market is. So if you're playing with the stock market, you might want to be careful because, as you're about to see, we've never had a bubble this big. When we look at the Buffett indicator, again, this goes back to the 1960s. You guys can see, as far as the Buffett indicator, we are extremely off the charts. Historically, it takes a long time for the stock market to rebound. Now, I put an arrow from March of 2000 to December of 2017 because it took 17 years for the Buffett indicator to hit the levels of March 2000. Look at the Crestmount PE, price to earning ratio, and this goes back to 1870, guys. 1870, we have never had the problem that we have right now. And when we look at the dot-com bubble that I'm circling right here, the Crescent PE ratio was 33.7. Right now, we're in the 43s. This is the PE10 ratio. Now, right now we're sitting at 38.6, which you guys can see is drastically elevated, but it is not quite as high as the dot-com bubble, which was sitting at 44.2. Also interesting, if you go back to 1929 time, it was sitting at 32.6. So we're higher than we were during the Great Depression. The Q ratio since 1900. Again, this is going back since 1900. Now, you guys can see that this peaked around the late 1950s at 1.73. During the dot-com bubble, it was 1.47. Average is 0.84, and right now we're at 1.98, and we got all the way up to 2.09. Further showing you guys, regardless of the data, we got a massive bubble going on right now in the stock market. The S&P Composite Index, the regression to trend, and this is very interesting because this is going to show you guys like how much the stock market has really been going up since about 2012. In other words, you guys, we have a lot of room for a correction. Mitch Vexler, is this the end of the massive bull run?
Let's stand back for a second and look at this. More than likely, the answer to the question is yes, but that has to do with technicals. And 3 days ago, I said that there's a high probability, 10 bars, 2 legs, sideways to down. Well, that's from the position of a chartist, somebody who understands and studies the charts. A lot of people don't do that. They believe in fundamentals. Well, let's just start with the idea that nobody knows anything, but there are ways to determine and come up with a economic theory as to what is going to happen in the marketplace. So when you look at what has happened, 10 bars, 2 legs, sideways to down, it just happened in one day. We are at the target. It just happened because President Trump had an issue with China and the market freaked out. Well, what was the market doing? Those are the algorithms. Human beings generally don't trade that fast, that deep, and it went straight down. But isn't it interesting that it stopped at a technical level, double bottom? Now, in reality, what may happen, the exact same size of this bar is about to play out probably in the next 10 days, also down. We'll see how the market opens up shortly. But the point of the matter is, if you had been studying, and the people have been studying the way I've been suggesting, learn what the market is doing, and this goes for everybody. And if you had done it 8 months ago, you might be in a position to have traded that successfully on Friday. That would have been a lot of money to a lot of people if they knew how to do it. Education is the key.
Education is the key. And speaking of education, Mitch, let's go into the statistics and data and determine what's going on with farmers. And I want to start that process by listening to a video of farmers who are basically telling and warning America that they're going bankrupt.
I've never been as worried as I am now about whether or not my kids and grandkids will be able to carry on.
He said, I love you, Mr. Trump. I need to see the fruit of your love.
5 of my customers have committed. That's how serious that this is.
And what it costs for us to farm is astronomical now.
I farm with paid-for equipment. All my tractors are 50 years old, and I can't hardly make this deal work. I think the tariffs are the ice cream on the cake of a perfect storm.
After a horrible year last year where most farmers in Arkansas Delta lost money, this year's going to be worse.
We made a decision to go out this year in the spring. So my son will not be the seventh generation on our farm.
We're going to lose 25 or 30% of the farmers in this country if they don't do something. It has to be done, and it's not just here. It's everywhere.
Jumping right into the data, this article from UADA that came out on July 15th titled Clarification Q1 2025 U.S. Farm Bankruptcies Exceed 2024. And really what I want to know is how do the bankruptcies compare right now, say to 2017? Is it higher? Is it lower? Now, this is going to go on in state. We've had 259 filings in the United States between April 1st of 2024 and March 31st of this year, which is basically a year-over-year total. So they're saying 259 year-over-year. The first quarter of 2025 outpaced those of the same period in 2024. When I go back and I look at this chart, which goes back to 2014, it gives us a better idea of what a historical norm is for farmer bankruptcies. So again, this is the calendar year, chapter 12, farm bankruptcies by region. But we're going to look at the total number. So when we look at 2019, you guys can see here, we actually had 599 bankruptcies for farmers. In 2018, which is probably a more normal situation, we had 498. In 2017, we had 501. So again, we haven't even reached 300 yet. China stopped buying soybeans, and that's devastating farmers. We see right here that it's a roundabout, because obviously this is changing because they're not purchasing, China's not purchasing soybeans, as I'm about to show you, but the entire market is sitting at 51.06 billion. Comment below on whether or not you knew that. This is a really good article from the American Soybean Association titled Soybeans Without a Buyer, the Export Gap Hurting U.S. Farms. China is the world's largest soybean buyer, and the competition is nowhere close. Over the last 5 soybean marketing years, China has imported an average of 61% of the world's traded soybean supplies, more than the rest of the world combined. So they're very, very important when it comes to U.S. farmers selling soybeans. And this is a chart right here that you guys see titled Loss of Chinese Purchases of U.S. Soybeans. Okay, so you guys see that, and this goes up to about 2024. They're still purchasing, again, to the end of 24, more soybeans than they were purchasing prior to 2016. So it's under 2016, but prior to that, it's still elevated. The U.S. Department of Agriculture estimates U.S. soybean farmers experienced a $9.4 billion annualized loss during the 2018 trade war, accounting for a staggering 71% of the 27 billion total losses in agricultural exports suffered by U.S. farmers during that time. What China's doing in turn is they're shifting to Brazil, and Brazil has now overtaken the U.S. for soybean production. You guys can see that on that chart. When we look at a more updated chart to see, is China still buying soybeans? You can clearly see from this chart, no, they've literally rug pulled American farmers. China bought 12.6 billion in US soybeans last year. Now it's zero.
Little farm economics lesson in what farmers are dealing with right now. Corn 50 years ago, actually 51 years ago, 1974, hit an all-time high of $4 a bushel. And it ended up about $3 and into the next year in that $3 to $4 range. So what was the price of everything else back then? Combines, you could buy the biggest, baddest combine John Deere made for $35,000. You could rent land for $35, $30 an acre, $20 an acre sometimes. Today, land rent's 10 times that. You could buy fertilizer for a couple of $100 a ton. You could buy a house for $15,000, $20,000 and a car for $3,000 or $4,000. So you fast forward 51 years later, what are we looking at? Well, the brand new John Deere combine is just a little over $1 million. Land rent is anywhere from $150 to $300 an acre. Everything's gone up. Fertilizer, $800. Everything's higher. So what farmers are faced with is the same price of grain, but everything else going up in price. So the way we've dealt with this over the years is to consistently produce more and more and more corn. And this year, we're going to hit a record corn crop. So we've farmed our way out of this bad scenario to the point where the math no longer works. So next year, it's expected that a record number of family farms will file for bankruptcy in 2026. We had a record number just in the first quarter of 2025, and they think probably double that in 2026.
Mitch, given that the stats seem to be much worse in 2017, 2018, 2019, but also the fact that China stopped buying soybeans, do you really think that the farmers need a bailout?
Unfortunately, the answer to the question is probably yes, but this problem has been made more sophisticated by people who think they know something without even understanding what the industry, the farming industry itself, is really about. They don't understand the economic models. They do things for political expediency, which is basically the same as saying, well, we think. Well, you don't have the right to think if you're hurting families, you're hurting farmers. And in fact, you are probably hurting the United States of America because you're putting people in a position where they can't have food to eat. You destroy the farms, you've got, in reality, a huge societal problem. All these things stack. There are solutions. We'll touch on some of them in a minute. But yes, more than likely, and that is going to require proof on behalf of the farmers and proof on behalf of the co-op as to the goods that are produced. But the government's going to have to get involved here and determine what it is to do in order to ensure the security of the food chain throughout the United States of America. America first.
Yeah, well, speaking of America first and speaking of what the government plans on doing, let's give the viewers a breakdown of what the headlines and rumors are suggesting is going to happen with this bailout. The Trump administration is considering a bailout package of at least $10 billion for American farmers impacted by trade disputes. The aid package is a response to the financial difficulties faced by farmers due to President Trump's trade war, which has led to surging costs, foreign retaliation from tariffs, and plummeting commodity prices. The situation has been exacerbated by Trump's policies, including the deportation of migrant workers and renewed trade tensions, particularly affecting traditional American crops like soybeans. But when we go here to the proposed bailout mechanisms, the White House has focused on two primary options for providing aid to the agricultural industry. Number one, and this is interesting actually, tariff revenue. One idea publicly suggested by Trump involves giving farmers a percentage of the income the United States receives from tariffs on imported goods. Trump has stated that a small portion of the money made from tariffs would be used to help farmers. However, experts indicate that using tariff revenue for a bailout is complicated and would likely require congressional reallocation. Direct payments to farmers from tariff income are substantially capped at $350 million, a figure much lower than the aid being discussed, and any adjustment would need congressional approval. Now, option number 2, the Department of Agriculture's a slush fund. The other option is to tap into a fund at the Department of Agriculture referred to as the Economic Commodity Assistance Program, or ECAP. The Trump administration utilized this fund in March to provide $10 billion, already provided $10 billion in direct payments to eligible agricultural producers for the 2024 crop year. However, the Commodity Credit Corporation, or CCC, fund, which has been used for previous bailouts, is reportedly running low with only $4 billion left, and it has not been replenished this fiscal year due to the government shutdown. One last boots on the ground video from a farmer that's going to tell you guys how he's suffering as a result of these tariffs and the increased cost of farming.
How necessary are they for the farmers, and how much time will that buy you all?
Well, it's like putting a Band-Aid when you need major surgery. It's a partial fix, people. And I'm telling you that the United States is heading down the wrong path in America's agriculture. These skilled farmers that are losing their farms are leaving this career path with an awful lot of knowledge that we're not passing down to the next generation of farmers. And farming is a skill set that has to be taught. I'm a 4th-generation farmer. I was taught to farm by my daddy, John Board Sr., my grandfather, Thomas Board, and Lee Robinson, all invested time and effort to show me the skill set of farming. And I think I'm pretty good. I've been out here 42 years at it. We can't let these farmers leave this occupation and not tap the level of skill set. And that's a big mistake on behalf of this administration and the president. This isn't something that you just get out there and say you're going to help them and you like them and all of this stuff. This is something that has to be planned out. Your farming operation has to be planned out months in advance. It's not like a regular job, people. So it's it's the hardest occupation known to man. The work never ends. My hat goes off to any farmer that's out here doing it every day. And it's a shame that we're in the predicament that we are with some of the lowest crop prices in history for corn, wheat, and soybeans. The 3 things that the United States still does better than anybody is produce corn, wheat, and soybeans.
Mitch, how would you suggest, if you could talk to the administration of President Trump, how would you suggest that they spend that $10 to $14 billion in a way that directly helps the farmers, but also does not add to more inflation, hurting mom and pop?
The $14 billion isn't going to move the needle. So hedging futures, you can hedge soy, corn, wheat, sugar, hogs, cattle. You can also do what's called cross hedging. Now, that takes a sophisticated farmer, and there are sophisticated farmers out there that know how to do this. But if this was done at a co-op level, so the farmers create the food, they turn the food into the grain mills, the storage facilities, those are the co-ops. If the co-op could actually hedge the product that's been dealt with and created over, say, a 5-year cycle, they now have targets on both ends. Here's our production. Here's how much, generally speaking, the yield is over 5 years. Here's how much we have to hedge in the futures market. Now, hedging generally costs money, but there are ways through options where you can actually make money. You don't really care what direction the market is going in as long as it stays in the middle, 1 standard deviation either side of the target. So if the government wasn't the government, so here's the problem with the government. When the government says, we're the government, we're here to help, generally speaking, that isn't true. And if it was true, it would only be short term. In other words, okay, maybe they could help, but then they would turn that problem, that cost, that expense of helping, they would lever it. The second they lever it, they've now added on to the economic damage. You're seeing that play out by virtue of the inflation that you're now seeing pretty well everywhere. So the third element is you have a national security risk here. Food is a national security risk. It is a food security issue. So then you have what's called the CRP program, where the government actually pays money for people to let their land go fallow, do nothing with it. And those contracts can be up to 10 years where the land is just sitting there. Maybe the thing to do in that particular case is take the CRP money instead of paying people to do nothing and utilize some of those funds to cover off some sort of program that does the hedging. The tariff income, taking a portion of the tariff income, again, because the Government has created these issues, governments around the world with tariffs. That's a viable alternative. Another alternative is offset the cost of the inflation with zero interest loans for those who have the proof of the yield. Those farmers have the proof of the yield, where the proof of the yield is sent to the local co-op, like I said, over a 5-year period. Unfortunately and practically, some farmland will have to be taken offline, but the point is farmland can be brought back online and it can be managed where the nutrients are put back into the earth. Part of the reason why they've got so much demand for fertilizer is because they've outstripped the ability of the land to produce the product. And that drives the cost of fertilizer up, because in order to get the yield, they have to spend more money on fertilizer. So these are a series of issues that have to be dealt with, and this is probably a really good time to deal with it. The other thing is, mom and pop, if you've ever got the opportunity to go farm to table, support your farmers. Go buy eggs from a local farmer. Go buy beef from a local cattle raiser. Go buy hogs. Whatever it is you need, buy it local. It does make a huge difference. And a lot of these farms are actually now turning into mini tourism spots so that the local community can go and say, okay, fine, here's $15. Let me help you for 3 hours. They'll come up with all sorts of schemes in order to keep these farms afloat. Buy local.
We're going to start ending our videos with a final thought from Mitch, who's going to essentially just break down whatever it is he wants to break down in the economy. So, Mitch, what is your final thoughts? Given all the information, how frustrated mom and pop is, they're obviously being lied to, all of the propaganda, all of the lies, the deceit. What can we say? What is your final message for the viewers, Mitch?
Isn't it interesting that I've been pounding the table on people learning how to trade and get around this problem? Because if your income isn't enough and you're able to trade just a little bit and to offset that income, that would be an ideal situation for you and your family. Isn't it interesting that the farmers, even though much larger in scale, are in the exact same position? They need to be able to trade around this. And unfortunately, in many of these instances, the government itself is the sole culprit. It is the government that has created this inflation, both at the central appraisal districts and at the Federal Reserve. When you print money and then you lever the hell out of it in the form of bonds, you're creating inflation. Well, the farmers are suffering from that, and mom and pop, regardless of the industry that mom and pop are in, are suffering from the same thing. Everybody is in the same boat. And that's why these documents that I've written to the Supreme Court of Texas with regard to the CADs, it's laying this out. Everything we're doing here, everything that Travis is doing, everything that Jeff Mashburn is doing, they're small component parts of a bigger network of problems. The bigger network of problems all end up in the form of bonds. Farmers have got the same problem with their bonds because their debt is levered. You think those farm notes and mortgages are just sitting there? That stuff is levered. Everybody has the same problem. Learning how to trade and learning how to protect yourself and learning that the press is lying to you straight up is very important. Don't go with the crowd. Go in the opposite direction. Start asking, why is this the way that they say it is? And most times it isn't.
Yeah, absolutely. And don't let other people do the thinking for you, right? Like, figure it out, read a little bit, do a little bit of math. I don't even have a college degree. I graduated my high school with a GPA of C.0. You guys, the way that I've learned all of this stuff is literally just taking a break and then digging in and then doing some critical thinking. Now, in conclusion, guys, I want you to take advantage of the empowerment center that we're creating. Go to realestatemindset.org, take all of the free classes, become an expert in real estate. Go to mockingbirdproperties.com. That's Mitch's website /DCAD. If you want to know what's going on with the absolute debauchery that is property taxes and ISD bond security leveraged up debt. It's all there. It's for you guys. It's absolutely free. And from the bottom of my heart, thank you guys for following along with us. We want you to be empowered, change, grow. And other than that, if you guys are out there investing in real estate, you guys already know we wish you luck and we hope you win.